Hello guys, welcome to the market channel. It's good to have you guys again today. In this video we're talking about how to be more profitable using EQ, how to increase your chance of profitability. And on my Telegram channel, whenever I drop analysis, people always the members have been talking about me making video on this EQ of a team, and I promised them. So I'll be doing that in this video. So before we continue, if you have not subscribed to this channel and you're watching this video right now, please kindly subscribe now, and don't forget to smash the like button and also share with your friends. And don't forget, also very important, put on the notification to get notified. So let's continue. We're talking about EQ. EQ is what we call equilibrium. Do you understand? Is equilibrium. So some people call it 50%. That's what people call it. Do you understand? You know, when you see something is equilibrium, that's like when something is at the middle. Do you understand? What's dividing something to two? So now when we talk about EQ, we have the discount, we have the premium. Do you understand? So let me just show you something. The tools we use most time for the EQ is Fibonacci tools. So don't worry, I'm going to explain how I do this on a chart and how my chance of getting more profitable trades with it, and everything I'm going to explain in this video. So just stay to the end. So like I said, the tools we do use for this EQ of 18, which is equilibrium, or to get 50%, is these Fibonacci tools. So which is this? Can you see it here? So if I should draw it now, you see something like this. But if you should draw your own, maybe as a first timer, you might not be having something like this. So yours might be having a lot of stuffs on it. So but I've customized my own to this, and if you want to do the same also, so once you put it on the chart like this, so you see something like this stuff on your chart. So click on the settings. So I might have disabled all the I've unchecked all the other part of the Fibonacci tools, and I only check the 0, 1 and 0.5. You can do so on your end too. And also the background of my this thing, I've unchecked it. So but you can add it back. If you hide it back, you have something like this. So the middle of this is 50%. You can use something like this for your home, but I just like it to be like this. But so that I can easily see it very well during out this video, I will hide the background. So let's just use it like that. So that's basically about. So if you're talking about the premium, this is the premium. This between this middle part to this up part is the premium of it. If you're talking about discount, between this part and this part is the discount. Do you understand? You know, when they say something is discount, that means you are buying at a cheaper price. Do you understand? If someone say, okay, I'm offering a discount for this particular product, that means the person is offering at a cheaper price than others. So, and if someone is saying, okay, I'm offering this particular stuff at premium, so that means the person is selling at a higher price than others. Do you understand? So what most trader or every trader should do for any currency, be it forex, be it crypto, be it stock, do you understand, is what you should buy at a cheaper price. Do you understand? That's at discount, and sell at premium. Do you understand? Do you understand what I mean by that? So that is, you buy at lower price and sell at the higher price. So that's just the way it is. But most traders, because of FOMO, fear of missing out, they don't wait for price to retrace correctly, maybe at least 50%. They just enter, like maybe they see the price just do one fake up move like this, they just enter, and at the end of the day the price will still push down just to do the proper retracement. Do you understand? And most traders, because of FOMO, they kept on losing because they don't have the patience to wait for the price to do 50%, at least 50% retracement. Some do use 61% or so, but let me add the 61% so you can see what I'm saying. uh Let me add the 61 0.1. So this is 61. So most people do use 61 0.61. There are some them just add this to like that. So 0.61, but personally I do prefer the 50% personally. So that's me. So, and that 50%, which is this line that divides between this and this line is called the equilibrium. Do you understand? So now, uh like I said, as a trader, you should wait, have the patient, don't FOMO because price is doing one fake pump, or because maybe you see, okay, maybe price pumped to a particular level and price was already coming down, and you're like, this is an opportunity that the price wants to move up again. You just jump in. You didn't want for the price to properly trace. At the end of the day, those kind of traders, they might end up losing their funds or getting stopped out because they enter at the wrong part. So I'm going to show you how to combine this with maybe like a support with other block and other stuff to make it to increase the chance of profitability with this. So let's get started. So let's go to the chart so that I won't just be talking. So let's know everybody likes practical. Especially I too. I like a lot of practical. So let's go to the chart. Which currency should we use? Which currency? Okay. I guess we have Bitcoin. Okay, let me just leave Bitcoin. Okay, let's use this. Okay, yeah. Let's use this. Matic. Yeah, this Matic. Let me hide this volume of the thing. So you see this Matic now. I guess I drop it in I dropped this right from when price was here. I dropped it in the group. So no, not on my own group. I don't think I dropped my own group. I drop it in that's gem inside that group. So now what happened? This how it is. I'm on 4 hour chart now, so this is 4 hours chart, and I want to use my 50%. I want to get my equilibrium. Let's assume price pump from here. There I stand. Price pump from this point. There I stand. I didn't see price to enter at this point. No, I didn't see the pump to chop. There I stand. Price pump to this particular point. There I stand. Or maybe price was still around here then. There I stand. And I still want to maybe I've checked on daily time frame and I've seen that price wants to continue to move higher or anything. There I stand. Maybe the overall trend on maybe on daily time frame assumption. Assuming maybe the overall trend on daily time frame maybe it's an uptrend, that kind of a thing, and then he wants to jump in that the price will continue to push higher, or maybe you are targeting like, okay, you want this price to come and test this particular high, this previous high, you understand, before the price continues to go shorter. Do you understand me? So, and you want to jump in, maybe it has done a very big green candle like this, and you want to jump in. You can't just jump in all of a sudden. If you're a smart trader, if you're a professional trader, you can't just jump in like that and say, okay, the price will continue to go up. Because when price move, maybe in an upward direction or a downward direction, price does it trace. Do you understand? That retracement sometimes we call them pullbacks. Do you understand me? Because you can't just see price moving like this. You can't just see price moving like this, continue forever. Do you understand? Price we have to pull back, then continue to up move, pull back, continue to up move. So that kind of pullback, do you understand? The only way to catch the proper period to enter the market at the right time, do you understand me, is through using you can be using another block, maybe price push back to that block. Look for your CES, that's confirmation of entries, and enter the market. But another way to add more, because along the pullback you might see a lot of other blocks. You might see a lot of so demand zone. Do you understand? But the ways I do screen out the right path or the right place to enter trade is using EQ, which is equilibrium. So let me show you an example. Like I said, how I dropped this particular coin and it was somehow accurate is because of this. Let me show you. So when I open this particular chart of a thing, let me go back to 4 hours time frame. I do analyze my chart on 4 hours. So when I open this particular chart, price was around price was around here. No, price was around here. Price was here. Do you understand? So there's a little other block here which price broke below, and then on lower time frame price was seen a sort of a up move, sorry, a sort of a little push up, but because of this big sell prayer, this kind of big sell prayer here, buyers and sellers are in control. I didn't expect the price to start pushing up like that. I didn't expect the price to start touching or come and test previous high. So I only expect just a small push up just to respect this area, then what continue down. And we're looking at it when the price continue down, there's a liquidity here. Do you understand? So meaning that there's probability we have two levels. Either price should bounce off from this level, but identify this level as what liquidity is below it, which is this. So there's high probability that liquidity price is going to what break this and tap here. So how do I know? I pick on my Fibonacci tools, which is this. I click on it. I put it from the previous high. That's a recent high, which is this. I drag it down. Do you understand? Some people do use recent lows, which should be the recent low. Do you understand me? This should be the recent low, or something like this, or where the move came from, or something like this. Do you understand? So, but I personally, if you use this, you might be able, maybe okay. Let me just do it like this. Okay, let me first of all do it like this. Okay, let's assume you made the price A on this previous high, and you pick it up, you put it down to what, to the previous low. That's the recent low, which is something around here or something around here, or you might have used something somewhere around here. Do you understand? So if you look at it, it's between 61% and 50%. So if you look at, if you put it here also, same thing. You put it here also, same thing. Do you understand me? So, but like I said, I made the move here. The price already did this, and the price was pushing down. And the reason why I was looking for maybe a possible up move, even though I know it's going to come down, like identify with this arrow, is that there is a chalk on 4 hours. Look at it. There's a break of structure here. There's a break of structure here of this eye. It broke this eye. Do you understand? So it broke this eye and broke this eye. So if price should push back, and if we should have a huge buying prayer, you might see the price pushing up again. But so like I said, I pick up my Fibonacci, I drag it down, and I use, most time whenever I'm on 4 hours time frame, I do like to use the extreme recent high and the extreme low. Do you understand? So where is the extreme recent high, which is the point I just put my Fibonacci this high, and the extreme low is this. Do you understand? So which is this, and I put in it here like this. After dropping it there, if you look at it, like I said, I don't really use 60%. So I see some people do use 60%. So people that use 60% might have been waiting for price here to bounce, maybe on this level, and they might have ended up losing or so. But like I said, let me remove it. I don't use 60%. So let me remove it. So now what happened? Look at it. Price pushed down. So where was I identifying? I was identifying this region because there was another block here. But when price got there, even though I wrote it there just to remind myself that there is liquidity below, and I also put it there. So there is high probability that the price is going to break this particular level I identified here. Do you understand me? And where was the next place where price could tap into is this area, which is, look at it, this is 50%. The area below that 50%, look at the other block here, which is here. So I identify that particular region out. So the meaning that if price is able to clear this liquidity here and tap into this area, is a good area for a what, for a long. Do you understand me? So that's a particular example of it. Let me give another example. Let's move from crypto. Let's go to maybe like all these forex pair and maybe, okay, this is a pair on forex. This is a pair on forex. Look at this pair. Okay, this is a 4 hours chart. Like I said, this is a 4 hours chart. So this is the 4 hours chart, like I said. And what how did I do it? What I do is that what you pick up your Fibonacci, the recent high, which is this extreme low. Like I said, you can use this as an extreme low, but if I'm the one, I won't use it. I've used that last low, which is here. Do you understand me? How do I identify where to put or where to expect price to push up? So there's my 50%. Below the 50%, I will either use this other block here, one, either I use this other block here, one, or I use this low here, which is somewhere like this. Do you understand? Know that this candlestick is another block also, but I can't use the whole big candle, it's too long. Do you understand? I will have used just two. So I might have identified this 2 area out and waiting for price to tap into it. If I'm able to get, I'll now go maybe to 5 minutes or 15 minutes region to confirm for CES, confirmation of entry. If price give me entry here, I might enter, and if price not give me entry here, I will enter here. Do you understand? So, but if you look at it, this 2 area is below the equilibrium, is below the 50% region. Look at another one. Look at this one, Euro GBP. Euro GBP. Look at this. This was a recent high. Do you understand? If you have to use this low, you will have maybe entered here. Look for area here, around here. If you have to use this low, you can use area around here. Do you understand? And you might have catch this small pump, and you must have closed out of this area also. Do you understand? Because it's chucking bearish, so you have closed out of this small pump again. So, but if, like I said, when I identify this my own region on this particular, I have to take it from this recent high and I drag it down to this last low. Do you understand? This low. So, like I said, extreme levels. So, extreme recent levels. So, which area I identify out? Identify this area. Do you understand? Identify this area out, and price has not yet tapped into it. So, if someone that uses this area, can you see this area? That's from the recent high. But let's assume what do you call it, when I identified this level, the price was starting to come down from this region. So let's pick it from here, from this region to the extreme low. Some people will have used this. Well, I'm the one that if they use this, they might have catch this small level there. But as for me, I didn't use that. I used the extreme low, which is this. And which area did I identify out? So which is this particular level. But where did the price bounce off? Look at it. Price bounce off at the exactly 50% region. Do you understand? So because price bounce off for here, I didn't go ahead and start pushing and start jumping into the trade and the rest. So another way to catch it was that immediately this was the recent high here. So immediately price broke this recent high. So the move that broke this recent high was from this particular region. So a smart trader will have identified this particular area out because there's another block, other block here, the last red candle for the up move. So, and what happened? Price tap into that level, can you see? And is what is giving a nice pump. So that's another way to catch it. So what I'm just saying in a nutshell is that if you want to buy a particular coin or you want any currency, you want to long it, so make sure that the coin retraces back to at least 50%. Do you understand? At least. That's for my own strategy. You might choose 60%, so you might choose below it, but for me at least you must give me 50%. So on any time frame, like I said, it's just for 4 hours. So if it's 1 hour, so it won't be that huge. For 4 hours, you might have to wait very long. Do you understand? So that's just if it is also maybe 15 minutes now. Let's go to like maybe 15 minutes time frame now. Do you understand? So let's go to 15 minutes time frame. So okay, so these are 15 minutes time frame. if someone that is trading on 15 minutes, so you might like pick, okay, oh wow, let's choose it from here. Maybe this is a recent high here, and this is the last recent low here. So drag it down, boom. So if you look at it, price is, as price is moving up now, is entering the premium area. So if I'm the one, so where we identify, maybe the person wants to go short from here, I will have identified this particular region, because I won't be using this I won't be using this I won't be using this place. This place, there's a lot of consolidation here, so I won't be using that. There's liquidity here, so I'll prefer to use this region. Do you understand? If price not tap into it, I will go to lower time frame and look for my CS. If CS is given here, I will enter. If it's not CS, I will leave it and waiting for price to come and clear this particular high. Let's look at this sitting around here. So waiting for price to come and clear it. Or if once price push down, maybe price start to what, push down now. Do you understand me? Maybe price start to push down. Maybe price tap into this previous high and push down a little bit. So if price is pushing down, I'll just drag my tools and say, okay, from that last high to that low, so I'll be looking for where to place trade around that 50%. If price will come to that 50% and trace back to 50% level, so look for entry and continue to drive up. So understand. So that's just basically how to use it. So that's just basically how to use it. So if you have any question, let me know. I know I'm talking about that blog, talking about some stuff. Yeah. So you should know what other block is. And if you don't know, let me know also. So that's all. If you have any question, put it in the comment section. Thank you very much. God bless you all. Have a wonderful day.